The number one business in the world is banking. It's banking.
Yep.
It's the changing of money. It's the loaning of money. It is.
Yep.
The largest building in Trustful is the bank. The largest building in New York City is the bank. So they, in essence, started their own bank.
In the sense that a bank has cash that people need and they charge a rate to use that cash, yes. But the model really, and this is just kind of the fun of what we get to do, in equipment finance, you've got the asset. Everybody understands like
the truck.
That truck is worth, again, let's just say 200 grand,
yeah.
right? When you do a contract, so let's say that truck is now going to be 60 payments of whatever to get you to the rate that you've decided you're okay with. The contract now has its own value. Like that payment stream of 60 payments has a value. And
because it's agreed, let's just use 5%.
It's an agreed upon 5% return.
$200,000
Yep.
financed over 5 years at 5%.
So that's the value over the life of the contract.
Correct.
But the reality is that there are other finance institutions out there that would buy that contract from you today for less than the total return because they got to make a return on their money, but you can make a return right now. And so many of the captives, do is they want to, I tell you, I think a great example is always like if you've gotten a mortgage, more than likely you've closed with whatever. And then within 60 days, you get a letter in the mail, and it's like, "Hey, we're your new mortgage company."
Mr. Cooper.
Right. All that just happened was that they took that contract that you signed and they sold it to another institution that was willing to pay them a fee that they were comfortable with today to get that cash back in and go do it again.
Okay, I want to walk through the whole example.
Yep.
I don't care how nerdy it is. So if you don't like this, skip
Yeah,
on.
I'm like you're
So
getting me in the
it, though.
weeds. Yeah.
So like $200,000 truck, Alltech Capital will finance it for 60 months at 5%. Let's use that.
Yeah.
Okay.
It, yeah.
So then what will they do? They will, in essence, sell that note. Give me a price. Give me something that you've seen before, an example. So who are they going to sell it to?
Yeah.
How much are they going to sell it for? And how does that make Alltech Capital money?
Yeah. So I'm gonna be probably this. So I got to be careful because they're really private.
Sure.
So I don't want to over divulge. But let's just say,
make numbers up.
It's you're talking about a couple points per transaction.
Okay.
1-2%, kind of deal. It's like it's not a ton of money when you consider the amount that you're financing. But the fact of the matter is, if you can figure out a system where you do it over and over and over and over again, and you continue to churn out high volume, it's low margin, high volume kind of business. You can make some decent money and again, I think Steislingers would say that Alltech Capital is a success story. I mean, it's a division of what they are today that's successful. So in the mortgage example, the only difference that I would say in what we do and even what we do at Battle Horse is you never get that letter in the mail. So the contract's sold, but there's language in the contract that says, hey, we're allowed to blindly assign this to another finance institution if we choose to. And so we have the right to do that. And so, but we want to retain servicing. We really want to build a business where we're partners with the folks that need financing. And so we do what's called a blind assignment. So we're generally speaking selling all of that paper a month or 2 months. So we close with our own funds, maybe collect a payment or two literally to us. And then we're selling, in that example, 58 payments to somebody else, some other financial institution that likes, maybe it's the asset class or they like the credit profile, they like the return on it, like all of those things factor in kind of who you send them to. But buddy, it's one of those fun markets where it is an absolute monster when we're talking about $1 trillion is done in the equipment finance space. But it's actually a pretty small market, especially when you look at what we do as an independent. We're definitely few and far between.